How's it going, everyone? Today we're going to be doing a market outlook for the week of December 8th. Let's begin. It's going to be a bit of a hectic week. First of all, in terms of the macro calendar, the main thing that we're going to be looking out for is FOMC. So that's going to be starting on Tuesday. We'll get the press briefing on it on Wednesday during the last 2 to 3 hours of the market. Correct me if I'm wrong. Now, Powell is expected to be cutting rates with current odds stacked at about 83% on Polymarket last I checked. The future funds rate is also at around 60 something percent. So both of those are pretty big indicators that rate cuts are coming. Um, and largely the market has been pricing that expectation in, I believe. If you look at the poly market chart for behavior in that market, it's been seen that basically, sorry, rate cut expectations were expected to continue to drop as these key data decisions were being canceled or postponed indefinitely. Like, for example, the October jobs report, the inflation report, and stuff like that. These are big data figures that the Fed and Jerome Powell really want to be able to make informed decisions on the rate cut policy. And they don't have that. So it's kind of baffling to me that the market is pricing in such a certainty for a rate cut with that in mind. I know the expectation and the long term projections going out into the beginning of the year, and even like it was technically the FOMC last FOMC of last year, where Powell set expectations for the 3 to 4 rate cuts that we're getting this year. So nothing has been moving really out of line with that. But nonetheless, usually for how data driven Powell is and everything, it's just quite shocking. Now, now, in terms of an actual forecast on price action, we're gonna be looking at the charts. So as you can see, we had this big breakdown from the uptrend, this historical uptrend going back to May. You can extend this line a little further, and it does have a lot of confluences with these highs here going down, but kept it over here to keep it cleaner. Now, we're not technically in the uptrend again. We actually rejected off of it very cleanly. If you look at the hour chart over here, you can see just how clean that rejection was. So not quite over here, but every time it came kind of within it. Over here, double rejection, perfect. Chopped around here for a while, and you can see it. Trend lines and stuff like that, especially macro ones, are never that cut and dry and clean. But nonetheless, if we're going long into this week, and it was a pretty harsh week to trade overall with the amount of chop that's going on, it became very difficult to get a break through this rough uptrend area. I expect that to continue until the FOMC decision is made, and also a lot of volatility coming in the day of. Now, now that means that the days going into FOMC, so Monday and Tuesday, are not very ideal trading days. We don't really want to be chasing that much opportunities because we know that the bulk of the volume is going to be coming in on Wednesday. With that being said, though, there are a couple of opportunities, and the market structure is pretty clean nonetheless, despite being super choppy and difficult to trade. It sets up a lot of good opportunities. So, looking right over here, I would say key levels should be right here on ES 69 or 6891.25. So, as you can see, there's a bit of a high here. We had the sweep trying to get towards this uptrend zone, rejected hard. We have this pre-market high as well. And really we can just look at this as a level by level type of play. So we're building a lot of structure as we go up. We have this rough level, we have this rough level, we have this area a little less, so you can kind of see here. There it is. So it's very level by level. If you're going to be trading this based off of the price action of last week, I do not recommend breakout trading, as in, buy the break of a level and expect continuation, because it has not been favorable for any breakout trader the last week. I'm personally a breakout trader, so a lot of these setups have just been really harsh and brutal to get into. I had a big short on Friday on SPY that netted me 210% net, and I had to sell my runner for 40%. So it was an average of 106, I believe. So not bad, but the other trades besides that have all just been bad. Even if I bought at a good level, the amount of chop and grind made it so Theta Decay really burned positions hard. And so I ended the week down slightly, 2%. That kind of sucks. Going into this week, I'm going to be taking the lessons that I learned and applying them. So I don't want to be trading breakouts. I want to be trading the pullbacks. This is a very mean reversion type of situation, right? We have very tight consolidation, but we do have a trend. So that means that while the trend is your friend, again, you want to also respect the market structure, because that's what's kind of been guiding this trend, right? A lot of times, trends, when they get vicious or aggressive, they will ignore market structure, and that's when you have huge imbalances up and some small balances down, maybe some even big drops, right? That is not something that's forming over here just because the moves have been so balanced, right? We have imbalance here, imbalance back down, chop around, imbalance up, imbalance back down, chop around, up, down, chop around, etc., etc. But again, we should be looking out for these key levels, trading long into pullbacks, going short into breakouts, at least until FOMC. And that's when the tone will be set for the rest of the year, even the rest, a good chunk of Q1 2026. Now, as I said, 68.91, 68.80.5, 68.70.5, 68.64 are all key levels. What if we break down from any of these, I really want to be targeting either these lows over here formed on the sessions. So this one right here at 68.36.5. I want to be targeting these lows over here, which align with this general consolidation area and this downtrend line. Keep in mind, we didn't really get a retest. However, a retest is not always necessary when you're chopping around like this much around a downtrend or breakout level, right? That shows that a lot of the volume that's being taken in for this move up, a lot of the liquidity that's resting above this trend line is just being absorbed, and it's actually rather healthy. However, again, retest is still not out of the question. Now, if we're aiming for highs, and I would say the bias is bullish for this week. Until FOMC again, all bets are off, depending on what Powell says, and no one's really informed about what happens. Hi, Max. But I would be targeting the highs over here from the Friday session, so 69.05. I would be targeting this uptrend over here, so 69.17-ish. And I would also be then really going just for all-time highs at 69.53.75. After you get beyond this point over here, as you can see, we break through this high. There is just major consolidation over here as we, form the structure, breakdown, huge wicks going into it because a lot of volatility is coming in, VIX is increasing, and then we just dump. So this is very much in alignment over here. So basically, once we get past this zone, there's not much resistance going into new all-time highs and then even further highs. Now, my outlook in general is not all that bullish, to be quite honest, simply because, okay, um, simply because I think macro environments are going to be shifting and getting a lot more cautious and difficult to trade around, a lot more volatile and everything. So, but that's an outlook that I have for the entirety of 2026, not necessarily like, this trading week. So it's just something to keep in the back of my mind, but have to be still aware of it, right? Especially if, like, for example, the Powell statement comes out and he is hawkish on further rate cuts and the economy at large, right? Um, Moving on with NQ. NQ is right now just getting at this high over here and these relative highs right here. So as you can see, we had this big dump, took out these lows here, came in very much towards these this consolidation area right here, and now it's moving higher just every day, pretty much same as SPX. Love coffee. Likewise with NQ, uh, it's a little more iffy because it has a lot more structure towards the top. So NQ, I would be targeting 260,107.5. I would be targeting the high here. You can see it was candle body high here, wick here, wick here, and obviously the all-time high. So those three key levels is what I'd be looking for as a bull. I would also want to be breaking through this resistance area right here. So 25, 820 or 818 rather, 819. If we can get a breakthrough and see strong continuation today and Tuesday, then I'm pretty confident that we can reach this level over here because liquidity is just not too deep right there. If you go and look at the fixed range volume profile, and let's just set it from this swing here to here, you can see we're getting out of the value area high. There is a low volume node right here, right? So you can see low volume going into this. So what that means is that there wasn't much trading activity over there. That means that when we revisit this area, resting liquidity will be much lower than, say, a high volume node, and there will be less contention going into it. So if you're a bear, you really want to be protecting this value area high, as well as these nodes to drive price further. But all we've been seeing is acceptance into these high value nodes, and now we're trying to push through the value area high. So the next one that would come is, of course, right over here, which aligns with our SR zone, and then it gets weaker and weaker as it goes on over here with no existing structure or liquidity resting above. Now, obviously, people can have resting orders wherever, right? I can set my, if I have NQ, I can set my limit sells at 30,000 if I want, right? It's not really the question of if liquidity exists. It's a question of if and how much liquidity rests over here after we've torn through all of this, right? So those are my key levels on here. Again, the main move on NQ, and it's going to be a lot cleaner than on SPX, is just a break of this value area high and then a move straight to 26 100. Now, in terms of a watch list, what am I looking at? First stock I have in mind is over here, USO. So USO, we will just go in, show it. So USO had a bit of a break over here, came back down in towards this POC. I expect this to continue rising, to be quite honest. This is mainly a geopolitical type play. Any tension with Venezuela coming up, and it's just been continually ramping every day. So as long as that tension keeps going up, as potential for US oil to spike and oil prices in general to spike, we have this, big breakdown, this huge amounts of chopped around this area, but clean little bull flag right here, right? So huge imbalance, chop, 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 respecting the trend lines very well, respecting this POC and the value area high very well. We are below the 4-hour EMAs, but that's not too stressing. We entered these calls. These were up 40 something percent. We entered 72 Cs. They're now probably going to be down when they open. I'm not too concerned. We have some time on these contracts, and I'm mainly waiting on them as a geopolitical play. So USO is one. The other chart that I'm looking at is Snap. So as you can see over here, we have this massive rounded bottom after reaching these relative double tops, almost relative. Um, Clear accumulation going on at this POC, confirmed by it, obviously. Look at the amount of volume on there. It's also net bullish delta. You can see over here, had some very nice chop, reclaimed the EMAs, continued chopping into them, higher, spike below, move up higher. Now we're back into the EMAs. I want to see them continue holding, and in my opinion, this is just going to be a classic ride the trend. So you want to be taking trades at the EMAs, okay, using a relative zone. Maybe you can use an ATR or some set percentage stop loss below the EMAs if you're going bullish. I would be targeting 8.03 over here. Then the other level would be right over here. So 8.03, 8.28, and then 8.65. I don't know exactly if that can come very quick, but with this huge rounded bottom, obviously you can see here this massive move right here. It's definitely possible, especially with good FOMC, and if Powell turns up very dovish rhetoric in terms of more rate cuts going into next year. Small caps benefit the most by rate cuts, to much surprise of people. But the if you're like when you're trying to determine alpha in something, it's not just as simple to say as like, oh, rate cuts is good for stocks, therefore just like buy stocks. That's not a meaningful edge, right? A meaningful edge would be, okay, rate cuts are situationally bullish for the stock market. What stocks will benefit the most from rate cuts? And the answer usually is small caps. Okay, why? Well, think about it, right? If you're a Mag 7 company, if you're Nvidia, Apple, Google, Meta, right? You don't need, you are at no shortage of funding opportunities, right? Everyone and their mother wants to buy your stock and have extra equity in your company, right? It's actually that they have the opposite pressures. They want to do stock buybacks, right? So Apple is on a huge stock buyback spree. Uh, why? Because Apple has the cash to be able to do that, right? They have huge cash reserves. They have big free cash flow to be able to support this going into the future without affecting their balance sheet too much. And so to them, the prospect of rate cuts isn't all that like beneficial, although it still is, just because they already have cheap sources of debt and capital, right? The companies which do not have people running hand over fist to be able to buy assets are small caps, right? So small caps will benefit the most by rate cuts and a very dovish stance by Powell. So keep that in mind, especially when you have very, very beaten down charts like this over here. Snap is just incredibly beaten down from these levels. And this level has historically been a pretty good spot to accumulate and then, expect a rip higher. So that's Snapchat. Moving into some bigger cap companies, I have Google over here. So Google is forming a bit of a bull flag, right? We've got this right here. very simple play with Google. I either want to be buying into a pullback on the EMAs on a large time frame, so the daily or even the 4 hour. As you can see, it's resting right on it. A breakout to here, I would be targeting 332.7 and then going for some fib extensions even further after that with a high target of my favorite 1.618. So that's around 7% gain. Honestly, possible with a high volatility week into very dovish statements by Powell. So very simple setup for Google. We want a break of the bull flag, and we want to buy at higher time frame EMAs. One more for the watch list that I'm looking at is SoFi. So SoFi, if you pull up the fib extension from the peak to the trough of this balance that we've been forming since pretty much July, you can see that it bounced off the 0.382, which is very bullish. Usually, when you have moves off the 0.382, that should be considered a bullish regime. So a lot of consolidation happening over here. We are sandwiched between the 0.5 and 382. We're still below the EMAs on the 4 hour and on the 1 day. However, this was a news-driven event by the CFO exiting the company. He didn't leave for any bad reason. He just retired. So, in my opinion, this is a big market overreaction, and you can see a potentially explosive move going back into these swing highs over here at 29.66 for SoFi, assuming that the market cooperates, Powell, FOMC, everything goes good. But I really like this level over here. I like the accumulation going on after this move down. I like the fact that the move really wasn't that severe. Market's overreacting. I enjoy doing contrarian trades. People, a lot of people say like, "Oh, the market knows all. The market is never wrong." So, look, a lot of the times it is, right? A lot of times it is because it's driven by people. It's people who buy and sell. Okay, algos, sure, but on the fringes, on the edge cases, it's people who always take over, and people are very bad at trading, frankly. Like, human psychology is not suited for trading. That's why this is so counterintuitive and difficult to grasp for anyone, including myself. And, you probably understand this too. Managing fear and greed are, on paper, they sound so easy, but it's actually the most difficult thing in the world to do on a comprehensive and consistent basis. So, when I see moves like this, I see the headline that caused it, I just think to myself, this is an overreaction. This is a great opportunity right here. I think we can have a mean reversion play back up. So, and also SoFi is in the banking industry, and they are heavy on the student loan, the private credit and loan, as well as just they also have a brokerage account and firm. So all of these businesses and like subsidiaries that they have benefit from rate cuts and a more dovish FOMC policy. So I would not be surprised if SoFi breaks out. Zooming into the 1 hour over here, the play is also very similar. So I don't want to be buying unless it's above this trend line right here, right? You can see high, high. We're trying to break through right now in the pre-market, but it's just not happening. So I want to be buying on the close of the breakout of this trend line and then aiming for the highs over here. So let's just say right over here. So 29.5 as a modest target. Trade gets invalidated if obviously, where is, oh, here, I'm blind. So let's say you entered right here. I would put my stop loss below this accumulation that's going on over here and set my TP somewhere over here. So huge RR. Those are the type of trades I love. Asymmetrical as fuck. Huge asymmetry between the market's overreaction and the reality of SoFi. And that is that it's a great company. It's a great company with a great product, great leadership overall that has for the most part not changed. One CFO leaving uh, because of retirement is not the end all be all for the company. Um, and I think the market will appreciate that and take it into account as it realizes this was a big overreaction. It's also kind of evident by this market structure over here with this balance. So yeah, thank you very much for watching. Hope you all have a great rest of your day.